Well, welcome again, anyone who's just joining in here. It's great to see you, and we're excited to reconnect. And we look forward. We have quite a few events actually coming up this fall. We'll be talking about some of them throughout the presentation, but excited to be back on with some of our online socials. And so nice to see lots of faces from across Canada on the call. So that's great. And we're excited to provide some information about what's going on in the market in Calgary here. So just to start a little bit about us, we've got quite a few of our team members on the call here, which is great. We've got Nikki on here. I saw Heather. We have Danny, who helps us with the commercial side, and Una, who is our full-time property manager. But of course, we're Phipps Real Estate Group. We assist buyers, sellers, and investors with all of your real estate needs. We're highly specialized in the investment space, and we work in residential, commercial, and property management services. And we're the trusted partners of Keyspire, Rain, Savvy Investor, and McGillivray Trusted.
All the groups.
Yes. So this is me. My contact information is up here. My name is Andrea. I am, of course, a realtor and also an investor myself. And I'm going to be starting off this evening getting into some of the economics and some of the stats of really what's going on in the market. So first chart I wanted to start off with here is from Stats Canada. Of course, Stats Canada data is always lagged a little bit because their reports don't come out until a little bit later on. So we're going to look at this as kind of bigger picture, long-term trends, and then we'll be diving into some more of the specifics of what's happening currently in the market, specifically in Calgary. But this was the most recent chart that I could find. So stats from Q1 of earlier this year showing the net migration into Alberta. So it was up compared to Q1 of last year, an increase of 4.5%. It's down a little bit from that peak that we really saw of last year and the year before. But what I wanted to point out here in the graph is really this long-term trend. So we can see that, compared to long-term trends, the migration into Alberta is still significant. It's slowed a little bit since that big peak that we saw, but still significantly higher than we've seen in many years, right? Sorry about that, skipping ahead. So this one breaks it down into migration by type, so interprovincial and international. So in Q1 again of earlier this year, international migration increased by 12.5% compared to Q1 of the previous year. In the same period, the net migrants from other provinces, so interprovincial migration, was down a little bit. I think probably part of that reason was because a lot of the other markets in Canada started to slow down, whereas in Ontario and BC things were at such a peak, and that was creating this big affordability crisis, and still is. So there was a lot of demand and push from other provinces, people moving here, but then a lot of those markets started to see things slow down a little bit, so some people stayed a bit more steady. But looking again at the long-term trends here, I think that's important to note. Both of these numbers, interprovincial and international, continue to be quite high. And when we're looking at these long-term trends, right, they're continuing to be significant. So we are still seeing a lot of people moving to our province from other provinces and from other countries because it is still really relatively affordable. And then this is looking at employment rate by province. So this again is from Stats Canada. These are a little bit more recent. This stat is from August 2024. So looking at this in comparison to other provinces, we have a really strong employment rate, which is exciting to see. And I think we're starting to see more and more diversification. We've been talking about this over the past couple of years, but of course, Alberta is still driven by the energy sector. Oil and gas is a big part of our economy, but we're seeing more employment opportunities and more diversification in a number of different industries, in agribusiness, in tech, our film industry, arts industry, aviation, healthcare. So a lot of new job opportunities and a high employment rate, which is really positive. And as we're going through, if you do have any questions, of course, don't hesitate to put them in the in the chat. I know Natasha's putting in a couple things in there as well, which is really helpful. Or you can unmute yourself also, and then we'll also leave some opportunity for questions at the end. So vacancy rates, Una's going to talk a little bit more about some of the specifics of the rental market later in the presentation and kind of jump into what we're seeing right now. Again, these stats are a little bit lagged behind. This was from the CMHC report that came out in January of this year, but it was based on stats from the previous year. So just noting that there's a little bit of a lag there, but I think, again, looking at the big picture, there's some key points and takeaways. So the overall vacancy rate for purpose-built rental apartments came down last year in 2023 as rental supply really struggled to keep up with the demand. And this was the lowest vacancy rate we've seen in almost a decade, which is significant. Again, continuing to see strong population growth, stable economic conditions, and that really boosted rental demand. People that are moving to Alberta, may want to come check it out and rent for a year before they purchase. So we are seeing a lot of demand there. The average 2-bedroom apartment grew by 14.3% for the rent, which is big. And that's the highest rent growth we've recorded in Calgary since 2007. So that's quite significant. We've seen rents continue to increase. And affordability challenges really have persisted for households as vacancy rates, especially in the less expensive rental units, have remained below 1%. So that strong rental market is continuing. And again, Una is going to dive into some of the specifics of what we're seeing right now in the season. But this is what the stats have been showing. All right, so these are the most recent stats that were released from CREB, the Calgary Real Estate Board, for August 2024. So as you can see, our benchmark price here was at $601,800. And this was 6% higher from August last year, slightly lower, however, than the July 2004 benchmark price. So what that means, we're starting to see things maybe level off or soften a little bit. There was a pullback in sales that we saw and an increase in new listings, and that contributed to our months of supply increasing slightly. So this months of supply indicator, when we're looking at any number that's 2 or less, that's a strong seller's market. That's what it indicates. That means, if no new inventory were to come on the market, everything that's currently listed would sell out within 2 months if things continue to sell at the same pace. So we've been within these strong seller's market conditions for the last 18 months or so. And we're just starting to come back above that two months of supply mark. Between about 2 to 4 months is moving towards more balanced conditions. And then as we start to get above 4 months of supply, it's more into a buyer's market. So really, we're moving away from that extreme seller's market that we saw in the spring. That's when things were really at the peak. Inventory was very tight. However, we're still right on that edge of the seller's market. It's, by no means are we moving into a buyer's market. Things are still strong. Inventory is tight. Just the pressure is easing a little bit. And what we're seeing is a little bit of a diverging trend. So in particular, we've seen that higher priced properties mostly drove the supply gains that we've seen in those stats. And the most affordable homes in each property type continue to report supply declines. And, that's what's affordable. With the way that interest rates have been, they're starting to come down, but they're still higher than we had seen previously in the past several years. And with everything, affordability, inflation, the lower price points is what is affordable for many people. So we're starting to see a bit of this diverging trend where the properties that are priced above 600,000, we're starting to see inventory increase a little bit, sales slow a little bit more, whereas the lower price points are really staying quite competitive still. And I think this is an important thing to note is when we're breaking things down, we're looking at apartments and townhouses saw the biggest or the largest increase in price year over year in Calgary. So we saw a 12% increase in benchmark price for townhouses. So that's year over year in August, and a 16% increase in benchmark price for apartments. So that's a significant price increase. Again, it's those lower price products that are affordable for people where there's been a lot of demand, competing offers pushing prices up.
Mhm.
And then this is always an important chart that's sent out by CREB each month as well. And I think it is showing a bit of different trends as well in different areas of the city. So when we're looking at the east sector of the city, the east sector saw the biggest increase in prices as well year over year, which is quite interesting. So, you know, within the east end of the city, usually we have a little bit lower price points. That area of the city saw a really significant increase in prices over the past year. The west end of the city, you know, always historically has held value quite well. You're on the west side closer to the mountains. But I think that what this graph shows and what I wanted to really speak about is, you know, it depends on what your strategy is. There are different strategies, you know, that may work for you. And it's important to look at the not only your strategy, but then also the specific area of the market that you're looking in. You know, that initial benchmark price that I talked about on the first slide with the chart from CREB, that applies across all properties. So yes, it gives us the larger trends to look at, but it's important to look at the specific area and specific type of property that you're looking at to know, okay, what's going on. We are seeing some communities that, you know, are maybe moving more towards that buyer's market because there's an oversaturation maybe of condos or an influx that's all coming on the market at once or a higher density. So really important that when you are looking at the city that, you know, you're narrowing in, and of course, we're always happy to help provide that data for you so that you are making informed decisions based on the specific type of property and the area that you're focusing on. All right, I'm going to hand it over to Nikki. Just got to find you here, Nikki, and I'm going to pin you on here. And she is going to talk a little bit about some of the tips for both buyers and sellers in the market.
Hi, everyone. Nice to meet you guys and see you guys. Nice to see cameras on tonight. I've been with the Phipps team for just under 3 years, and it's been fantastic, continuously learning and growing and loving the investment space. And although we're, you know, majority investment focused and with our clients, we also, you know, we work with a lot of residential buyers and sellers. So I'm here to give tips and tricks, you know, and kind of update you on what is going on with a buyer, whether you're looking at a residential property or an investment purchase. You know, first off, I think it's really important to align your strategy with the market conditions. And Andrea went over that. So, you know, it's really important to, yes, the market is softening a bit for buyers, but what price point are you at? Are you still at that really competitive price point? So going into buying, you have to look at what is going on in the market. And, you know, we are seeing that shift. However, Andrea did say, you know, there are those price points that are very competitive. And with that competition comes multiple offers. And in order to set yourself up as a buyer and put yourself in the best position, you really need to be ready. And you need to be ready for the fast-paced market. And what that means is having your team behind you. And first and foremost, you know, interview your realtors, find out, you know, where you feel comfortable, find out who you feel you've got the most market knowledge with. And obviously, you know, a matter of trust. When you are putting the trust into your realtor of choice, it's important because that's our job, is to provide you when you are, you know, up against some of these multiple offers. It's our job to provide you with a market analysis. And, you know, you want to trust your go-to person to provide you with the right information. So you know what? You're not overpaying or you're not underpaying. So you actually can compete with those multiple offers. So picking your team, picking your realtor of choice, you know, whether you're going with a bank or a mortgage broker, having, you know, that pre-approval is, you know, first and foremost, even before going to look, you want that in place for sure. What is the budget that we're working with? Also, does your mortgage broker or your bank, do they have the updated documents? So if you are going into that multiple offer situation, and that's not happening as much as it was in, you know, the spring market, but do they have all of your current updated papers? So when that financing condition comes in, we're ready to go. Do you have a home inspector picked of your choice? Do you have a lawyer? Do you know what your fees are going to cost? Do you have a condo doc review if you're shopping for condos or apartments? So having your team set up prior to going to look is, I would say, first and foremost, the most important thing. Secondly, you know, you want to check out and you want to explore your options. right now with, the lack of inventory and certain price points, I think it's really important to keep an open mind. Working with buyers, sometimes we have these ideas in our heads of what we want to work with. However, going to explore different areas and really differentiating your wants and your needs. Are you able to put a little bit of like sweat equity into a place that's a little bit lower priced and been sitting on the market, knowing you can get it to where you want? Maybe that's not what you went into it thinking, but perhaps that's something to consider. You want to, so your wants and needs list, keep an open mind, explore other areas. If you are stuck on a community, by all means, but it's always good to check out, whether it's a detached home, perhaps you want a townhouse with a garage. So I think it's really, important to have those conversations with your realtor and explore everything. So when you are making that decision, you're 100% sure that that you've seen everything that you're looking for. You want to consider the components of drafting up your offer. And some of the things to consider when you're drafting up your offer is what price point are you going into? And with your realtor, if you are potentially going into a multiple offer situation, us or the realtor of your choice, we have strategies to go into this. And there's different factors and there's different ways. And we will discuss those in detail with you on what you feel most comfortable with. But, what is the price point you feel comfortable with? Have you factored in, your property taxes, your maintenance on the property? Are you shopping below budget, or are you at the top of your budget and there's 5 offers on the table and it's most likely going to go over ask? So, your price point's very important, and that's where we come in. We will provide you with a market analysis and comps in the neighborhood. You might pay over list, but the property might be listed below market value to begin with. And that's our job, is to provide you that information. Obviously, we don't want you paying, X amount of dollars over ask, but perhaps this one property is, calling for that because potentially you've lost out on other offers, and this is the one that really is speaking to you. Guys want to be here and paying that, amortizing it over 20, 30 years. You kind of look at it from the financial situation there, and that's our job, is to kind of walk you through those steps. The conditions of the offer, you traditionally have a property inspection, you have a financing condition, potentially a condo doc review. If you do have all your papers to your mortgage broker, a pre-approval letter, you want those conditions as tight as possible, as short as possible. So you could potentially have a turnaround time if, all documents are updated in 3 to 4 days. And that's a conversation you want to have with your mortgage broker and them going to their lender. How quickly can we get this approval in place? And they will know that because they know which lender they're going to go to. So that's a very important conversation to have prior to putting in the timeline for your finance condition. And your deposit is important. I feel like some sellers, they really want to see a strong deposit. Some sellers, they're not too concerned, but definitely make sure that that those funds are readily available. They have to be readily available, and that is usually due, and it's held in trust approximately 2 business days to 3 business days after an accepted offer. And those funds, like I said, have to be readily available. It will show the seller that you do have the funds to lock down the purchase. So definitely something to consider. And what was I going to say? Oh, another thing to consider too is, when you are buying, and from an investment point of view, as an investor, and, when you're doing your cash flow analysis, are the rents at market value? So it's important to reach out and have your realtor reach out and, find out what those rents are. You're going to get them, but also do your research as well as working with your realtor to find out if they are at market value, so you can do an accurate, cash flow analysis. I think that's really important because we are seeing properties, and it's usually the ones, sometimes are sitting on the market and rents are not at market value. And, these owners that have owned properties 20, 30 years, they have no clue what market rents are. And this can be, advantageous for you to take advantage of some of these gems of properties that are undercharging their tenants. So I think it's really important to make sure that you do your research and work with your realtor to find out exactly the numbers and how accurate they are with what the current rents are. Anything else, Natasha?
No, the thing I was going to add to that was going, because that also could be a reason that a listing is not selling. Because if the rents are low and there's, 6 months left on the lease, an investor might not want to take it over. But if you can get it for a better price as the buyer and kind of make the numbers make sense, that can work to your advantage. I think too, being strategic on the buy side too, you can even just have a search going for properties that have been listed for 30 plus days. And if they, or whatever amount of days you want, and that will very easily help you identify who probably was a little bit maybe greedy when they came to market. And now they're having a bit of a, reality moment where they're going to have to decide if they truly want to sell and might be actually willing to negotiate. So if you're buying, that can be a nice little trick to look at. But yeah, that's good. On to the sellers.
Yeah, so like on to, a few tips for sellers. I think when you're selling, I think having a really detailed conversation with your realtor. I think it's really important right off the get-go. Make sure you guys are on the same page. And, again, it's your realtor of choice, the one you want to move forward with. And I feel like having those conversations with your realtor about what is going on in my community, what is going on in the market of, say Tuscany or New Brighton or wherever you are selling. What are the current days on market? What is the list price versus sale price? And your realtor we will provide you, if it's us, we will provide you with a full market analysis of your property and let you know all of these details to help you price your property accurately. And at the first and foremost and most important thing when selling a property is that you are priced accurately. That's really what's going to sell your property right from the get-go. Obviously, when you are selling too, there's, a lot of tips and tricks in regards to how to prepare your home, and your realtor will let you know. They'll do a walkthrough. They're going to give you a housekeeping list. They're going to email you what to take down, what to put away, minimal declutter, put away, your winter jackets. If you're in the middle of July, put away your winter boots at the front door, cleaning up the front door area. All of that will be provided by your realtor. And, the pricing your property is extremely important. And the reason being is because that's when the most amount of eyes are on the property. It's going to hit the MLS and it's going to hit, realtors and buyers search criteria. And if, you're at that $599, you should be priced at $599, but you're like, yeah, inventory is kind of low. I think I'm just going to, see how it goes. Let's do $625. Well, you've got to understand that people have a criteria and their pre-approval is only $600. So you're not even going to show up on their search. And that is one thing to consider. And what happens after overpricing your property? It's sort of, it's a shift. And what happens is when you've done a price reduction and you've been sitting on the market, then all of a sudden you're now giving the opportunity for the buyer to think, well, what is wrong with this property? And it actually makes you and puts you in a vulnerable position. So it's super important to make sure that you are pricing your property right from the get-go, based off of market value, based off of the analysis that your realtor has given you, and make sure that you are prepared for people to walk through your door and, stuff is put away, it's clean, it's show ready. Did you want to paint? Is it worth it to paint it? Is it worth to do some handyman things around? Again, we can provide you with some of the walkthrough to let you know, a lot of properties, they may not need painting, they may not need flooring. And some sellers think that they have to, spend a bunch of money to list their home. And depending on the condition of your home, that's not the case. Depending on what price points you're selling on, that's not the case. And, our job is to, sell your home for the most amount of money in the shortest amount of time without you spending a ton of money. And that really is what it comes down to. So we're able to provide you with that service for sure. Absolutely. And, one thing too, just investment properties and investment sellers, it's really, really important to consider, when is your lease up? Like, everybody's got a thought at one point. It starts with a thought. I think I want to sell. Sometimes, it comes to fruition within, there's some people that jump on it a week later. There's some people that wait 6 months. But if you've got that thought, what do your leases look like? It's more advantageous for you if you have a renter with, like, your lease is up, rather than renewing that lease, have it vacant, put your home on the market. You know, your short, like your pool of buyers and investors might be smaller if you just renewed a lease for 12 months. People don't want to take that over, especially if rental rates are under market value. So that's definitely one thing to consider, is if you do have an investment property, you've got a renter in there, you've got a lease coming up, you know what? I think if you had a lease and it was a month or two, that's definitely something to work with. But if you had just signed a 12-month lease, you know, just keep in mind, if you have a lease coming up, you're looking to sell, consider that for sure. Absolutely.
Really good point. That's exactly what I wrote down to say. Because you're making a decision for someone else, right? And you're shrinking the amount of people who might want that property. And a homeowner, if you're selling a property, is, you know, can be in the position to pay more for a property than an investor will, when, you know, all of us are looking at the dollars and cents every month. So ideally, having that vacancy, if it's a suite of property upstairs, goes a long way. So yeah, really good points. Awesome. Thank you, Nikki.
Yeah, no worries.
While Una gets, Una's going to give us a rental market update, but I just wrote down a couple of things on the kind of like buying, selling side. It's an interesting time to jump up in the market in terms of value. If you are a homeowner, like getting out of the more affordable price point and going into the more, you know, luxury, or it's not even luxury anymore necessarily, but the higher price points, because there is so much demand for the more affordable stuff, and it is not nearly as much as you get into higher price points. So from a primary residence perspective, it's a good time to go that direction. So I just wanted to point that out before I forget it, selling the tenanted property. And I also wanted to say to Andrea's portion about what's going on in the market and the you know, where we're seeing the appreciation. I'm pretty sure we could go back to our fall one a year ago, and that's exactly what we were projecting to happen, because affordability was becoming such an issue. And now we're going to see, when we talk about the strategy part, in the city center and inner city and higher density, we're going to see that appreciation start sort of catching up to what started out in the suburbs in the single family market, purely because people can only afford so much. So we'll get into that more, but yeah, thanks so much, ladies. And now we're going to have Una come on. I'm going to spotlight you so we can see you. Spotlight for everyone. Continue. Okay. There you are, Una.
Okay, hi everybody. My name is Una Allen, and I'm the property manager with the Phipps Real Estate Group. We've started this division now about 2.5 years ago, and we're steadily growing successfully. I wanted to give you a little bit of a report, so a mid-September report for 2024, and how it compares to the same time last year. And you know, how this time, how during this time we need to strategize to put us to position ourselves in the market so that we are reaching our rental goals. So Andrea, I think you're on the slide, so you can go on the next slide. Thank you. Okay, so the general rule is that in September, right after the summer, the 2-bedroom and 3-bedroom unit demand declines drastically. Usually it's the families now, they've settled into their school districts, and so the demand will decline. But what is the difference between today's September and last year's September? Is that we're actually experiencing a larger influx of new built inventory than last year. And so with that, we're also seeing that there needs to be more strategy there. Perhaps, you know, it's the price, you know, generally it's the price that we have to work with. But there are other strategies as well. On the other hand, sorry, go ahead.
For that. So there's a lot more competition to get your place rented because of the new built inventory that we're seeing, right? Is that Is that?
Absolutely. And I will get into more detail of exactly what it's looking like on the next slides. So another regular trend is that the one bedroom unit demand rises after the summer. It's usually the singles that travel and the couples that travel in the summer. And then when they come back from travel, they're looking for a new place. Maybe there's a lot of breakups during the summer. I'm not sure, but there is a large demand for one bedrooms right after the summer, and we do usually feel it. However, this year, because of such a large influx of new builds, that higher demand is sort of, I guess the way I worded it is that it's, it's impact, the demand is sort of, I guess what's
It's not
the,
like it's not there.
It's the demand is there, but the influx of properties is really impacting the rental rates. Even if the demand is higher, we're kind of seeing a need to work on the price in an opposite direction, going lower because just of the influx. So the normal trend is that the demand for the 2 and 3 bedrooms is expected to decline towards the January 1 date. And then after the January 1, it starts to rise again. Where in April, May 1 move-in dates, we're starting to see a much larger demand for those. And besides people, moving around for schools at that time, because usually families are still put, it is the influx of new families coming into the province or into the city and moving around. So in the springtime, which is a favorable time for people to move, I guess, around Canada. So so that is what we're seeing in the August and September of this year. We're seeing that this larger bulk of new built product that's hit the market is really creating a higher number of vacancies than the same time last year. Andrea,
would you say it's the same, whether it's like the north end of the city or the south? Like, does it matter? Is it kind of the same?
It's actually kind of it's kind of the same. I would say the Northwest is seeing the least of that, but in the Northeast and the Southeast and the far Southwest, all the brand new communities, we are seeing a large number of products come up. So, and the reason is because usually it takes 12 to 18 months for a project to complete. And last year, 12 months, 18 months ago is exactly when all the hotness was happening in the market. Like, as Andrea was saying, things are just cooling down a little bit now. And so that product is being finished now and is ready for occupancy. And so right after the summer, the construction time, and so we're seeing a lot of that product come out on the market now. Okay. So fall 2023 versus fall 2024, what's different? Well, between 2022 and 2023, Calgary has seen a 13% increase in the new built unit number year over year. Now, usually, like I just mentioned, it takes 12 to 18 months to complete on a new build. And so we're seeing this effect of the 2023 sales right now. The 2024 new occupancy stats are not out yet, but the competition to fill vacancies is definitely more hectic than last year. And we'll see that on the next slide. Yeah, Andrea. Oh. Thank you. So for example, let's look at the belt in the very far south, right below the Stony Trail. So there's a big ring road around Calgary called Stony Trail. And if you go to the below it, you're going into the newer areas. And so that's where most of our new builds are. And so what we're seeing here in the south below Stony Trail, currently there are, so I pulled one of our regular products, main level, 3-bedroom, 2.5 bath with a 1-bedroom, 1 bathroom basement suite underneath. So I've pulled that number, that product just to see, so the main level product, and to show you kind of what it looks like on the map here. So currently there are 51 3-bedroom plus den units, 2.5 baths, of which 70% are currently vacant, which means they're available for immediate occupancy. And last fall, the majority of the units on the market were not reached the point of being currently vacant. It was, last year, this time, we would be holding, well, you always had to adjust for that, fall in the demand. But the competition wasn't as big. And so last year, let's say during our open houses or times when we would open up for showings, we would have 7 or 8 groups come through, 3 applications from that, and then we could pick. And nowadays, we're seeing more like, if we're holding open houses the same rate of 3 open houses a week, let's say, on a vacancy, we're seeing more like 2 groups come through and no application. And then that's where we're starting to have to strategize how to attract the bigger numbers and how to close the vacancy as soon as possible.
So
Okay,
price.
Yeah, go ahead. Sorry, Natasha.
Thanks. So like what all this is telling me is, pricing is really important. Incentives to stand out are important. And you have to make sure that you're being competitive and that your property is showing well.
Absolutely. That's right. That's right. Absolutely. And when you have tenants, sometimes they're not too keen on, how that property really shows for your benefit, right? So these are all things to kind of consider. Sometimes, in situations where the tenants are not, the best in upkeeping their home, we might in a market like this experience a short vacancy where it becomes vacant literally, where now it's finally presentable. So
Okay.
there's a lot of inventory. One more, if you don't mind going back to the last slide, I just want to show one more corner here. So in the northeast corner of Cornerstone, Redstone, and Skyview, so that is the northeast corner. Again, the ring road is right around it, and they're just under the ring road there. Let's look at the speed at which new inventory is coming in. So the week of September 16th, this week, there are currently 102 2-bedroom, 2-bathroom units available for rent. That is a 30% increase in the number of units, in the number of the same type of unit since last week. So in 7 days, there was a 30% increase. Last week, there was 78 units or something like that. And now there's 102 or 70 something. Of which 90.5% are currently vacant. So there was a huge influx of brand new product. Of course, they're vacant. They're brand new. Now, the week of August 12th, so just 1 month ago, there were only about 15 2-bedroom, 2-bathroom units in that corner. So that is a huge difference in supply, and that is a huge difference on the rate that you were able to get for a September 1 move-in date versus an October 1 move-in date. If that makes right? So huge difference. Andrea? Thank you. So what can we do? Yeah, what do we do? Well, here are some great tips. What we must do is, number 1, we need to increase the time that we're on the market. So start advertising earlier, instead of a month and a half in advance, maybe 2.5 months, just to give maybe that little bit of extra exposure to maybe somebody that's moving in from another country or another
more time.
Like,
so that you're not picking that one application that you get, right? Like, give yourself more time to get good applicants in.
Yeah, give yourself more time, exactly, to test the price, to test what, exactly. Give yourself a little bit more time on the market. Expand advertising channels. So maybe place more, on Kijiji, on Facebook Marketplace. We use Rent Faster. That is a very good, it's a very professional rental market here in Alberta. But at this time, Kijiji and Facebook Marketplace are certainly where we're opening up our advertising to. So, you want to highlight the hottest features of the property. Lots of times, like, these things are completely overlooked or forgotten. The fact that there's granite countertops, stainless steel appliances, gas fireplace, or a fireplace, a gym that will add to somebody's value. They don't have to go spend money somewhere else on a gym. So just highlighting these features, and obviously then presenting professional photography, definitely is how you want to position yourself in your ad, for sure.
Yeah.
And now, most importantly, I know that Andrea, sorry,
Go back to the incentives. Yeah.
where, and most importantly, I know this is a mood killer, but it's definitely, you want to price yourself towards the lower end and not the middle, not the higher end of the rental price range. When we have this much competition. And the reason for that is potential renters, when they are looking for a 2-bedroom unit, they're not specifically saying townhouse or apartment. I'm specifically looking for apartment. They'll just say 2-bedroom, 2-bath, and you'll start stacking against 102 units in that corner. And it's critical to stack yourself somewhere on that, amongst those 102 units, towards where you will probably be seen, because they will press a button where they'll stack units by price usually. And so that is where you kind of have to, even if it's that, instead of putting $2,000, put 1,999. If that is what is going to stack you under a certain number of properties, that's definitely the way to go. And of course, we have to introduce incentives. So
Power through these.
we want to stick to one incentive at a time usually. And so, some of the incentives, for example, are, if it is clear that the unit is approaching a vacancy in a couple of weeks and the interest is still close to none, a price reduction can be offered for an early move-in. So, for example, we're at 18th of September now. So for October 1, we should have had something processed by now and something signed. And if we don't, then we kind of are predicting a vacancy. And so at this point, you want to kind of do some math, some numbers, and, on an annual basis, a 1-month vacancy is equivalent to reducing your asking price today by a 12th. So it may sound like, oh my God, that's a 10% cut. But why not? If that's going to get you an amazing application, that's going to, you're going to stack yourself somewhere where somebody of, a valuable application is going to notice and approach you. So, why stay vacant?
And I know we're kind of falling behind. But what I wanted to ask you was, like, do you find a certain incentive works better than others, like at different times a year? Because, like, going into winter, people are worried about their electrical bills being high, for example. So that one could be more attractive in the fall than spring, possibly. So you kind of got to be keeping, in mind of that as well, I would assume.
Yeah, and absolutely. That's exactly it. So you got to play around different types of product, different area, different demographics. They're all going to be attracted to different things. So, but probably stick to one to start with, and to one incentive to start with, and test it out.
Okay, awesome. Just for incentives, as a, you know, landlord investor, if you are going to do an incentive, don't do an incentive that you then have to like pay for every month. Get the expense out of the way at the beginning and you're paying for it and moving on. Especially if it's in the multifamily space, you don't want that incentive sitting on your books as something every month they're going to get this out of you for the term of the lease. Much better to pay for it up front in whatever capacity that means, rather than put it on your books as something negative. And I've seen a lot of landlords do that because it ultimately in multifamily and commercial, which we're talking about next, is going to impact your valuation of your asset. So one-off incentives much better than, you know, saying we're going to reduce your rent for 12 months or something. Just have it as the, you know, whatever you've agreed upon, and then the one-off incentive. So awesome. Okay. Moving on. Yes, Shelley, that's a good one. Moving costs, all that, right? Just like, how can you make someone's life easier? Thanks so much, Una. Reach out to Una if you need help with property management. Definitely here to help you. And yeah, especially for our out-of-town folks. Una takes very good care of them, so we're very lucky to have her. Next, I want to discuss commercial. So everybody gets to meet Danny this evening. Danny is here. Danny and I have been working on the commercial side of things together now for, oh geez, I don't even know how long, Danny.
About a year and a half.
A year and a half? Okay, Danny knows, see? And so I want to introduce you to Danny. We've been working on these files together and kind of give an idea of what's going on out in the market. Before I let Danny kind of do that part, I just wanted to talk briefly about what we're seeing in terms of like so many investors that we've worked with for 5, 10 years now, moving from the residential space, which all the things we just discussed, into the commercial space. And why might they do that? And the benefits are often that they have, maxed out on how many mortgages they might be able to get on the residential side, and so need to move into that commercial space. But are expecting it to be the same. It's the commercial world, guys, could not be more different than everything you know and trust and love about the residential side. So it's super critical. You are working with a realtor and a team who has done the types of deals that you're looking to do, and preferably is even investing in them. And so that's what we can bring to the table. So Danny, I'll let you kind of take it. What's it like out there in the commercial world for us right now?
Thanks, Natasha. And thanks for everyone for coming. Like I said, I've been with Natasha's team for about a year and a half, and I'm very privileged to all the training and mentorship I'm getting. A lot of what Una and all the girls, I guess, actually said about the market mirrors the market in multifamily. So there's still very low inventory here across the region, like Calgary and all the surrounding communities. And there's also the demand also is dying off right now, which is strange because there's now no inventory, but there's a little less demand. So this is obviously not ideal for sellers. And there is good opportunity for buyers there as well, because there's not as much demand. And a lot of the buildings that we're seeing trade are older buildings, which they talked about as well, like same as residential, buildings that have been owned for 20, 30 plus years, and landlords haven't updated the rents on them. So there's huge potential there for buyers to come in and increase your net operating income and increase your value for the bank. So big challenge definitely for buyers coming in is getting a lender to give the property good value, because the rents haven't been updated, and that's what drives your evaluation in commercial is the net operating income, not what the neighbors are selling for. So definitely something to keep in mind. And to Natasha's point too, when you are coming into this space, you want to come with lots of assets. So if you have lots of residential properties, this is good. The lenders like it. And you also want to bring lots of cash, just in case, there's lender fees or heavier like mortgage payments where you have interest only loans and stuff like that to be prepared for. So I mean, I wasn't as organized as these girls with all their slides and everything. So my presentation will be
what you are doing though is like, we're also seeing a lot of opportunities outside of Calgary in the surrounding areas. Can you talk a little bit about that? why these commercial investors are going to look at these, and they're selling fast.
Absolutely. Yeah. It's finally caught on. We talked about this a year ago, where we started talking to our investors about going outside of the Calgary area, because the prices in Calgary have pushed up so high that your cash flow numbers are getting really, really tight. And then the minute you go about 30 minutes or more outside of Calgary, automatically you get a fraction less of the price, but your rents are still really, really strong. So it just blows my mind how, when you go and look at these small communities, Brooks, Lethbridge, Red Deer, we usually don't go a lot further than that just because of the geographical location, but what you get for the price and what you can put the rents at, and your cash flows are just like anywhere from $1,000 to maybe $2,500 by the time you update them. So you will have the burden of carrying a very poor a very poor operating building because of the low rents. But then if you can see yourself through financially to the other side, man, there's some serious opportunity there as well for cash flow, which everybody wants cash flow usually, but in multifamily, it can be a little bit challenging. And we're seeing a lot of that as you push a little bit further out. So definitely a huge opportunity there. You do have to keep your eyes and ears peeled, and we take a lot of pride in being on top of these things of new properties hitting the market, because a lot of them actually trade off MLS. And so we like to keep on top of those for our investors, just so when they come on the market, we can get them sent out to whoever is interested, and then analyze them and go from there. So yeah, definitely really good opportunity here still, for sure, as far as growth goes.
Awesome. We do have an off-market multifamily email list. Danny manages it, but if you're not on it and you want to be on it, let us know. We just don't send it to everyone because not everyone is interested, but we do have our multifamily email list. If you want to be on it, let us know. And kind of now, thanks so much, Danny. What I was going to do just to kind of wrap all of this up, and we've had some questions about this, is how I always look at real estate is like, okay, there's all these challenges, problems. They're always a different mix of things, but what does that mean in terms of how we can be strategic and smart and try to think ahead of the market? And so that's what I'm going to do now, if that's okay with everybody. I also want to say this building on Danny's photo is actually our Stillwater asset in Edmonton. I just realized that I put up an Edmonton photo on our Calgary update. So sorry about that, Danny. Okay, so we can move on from there. Reach out to Danny if you need anything on the commercial side, or me, of course. We are working together on this as I myself have moved into the multifamily space as an investor. So thanks so much, Danny. Okay, so talking strategy. Let's start with residential, and there's kind of this inner city suburb thing that we've talked about a lot. Hopefully everybody here knows who I am. I feel like everybody here knows who I am. I'm Natasha Phipps, if I haven't introduced myself. But investment real estate has been my entire career. I was an investor before. I was a realtor now of 16 years. And most recently, we have founded a private REIT called WealthShare, and we are investing in the multifamily space. We have almost 300 investors in the WealthShare community. And so we have just done a lot in the last few years. And all of this overlaps. Everything we're talking about tonight overlaps with WealthShare and with the team. And so the strategy is what I'm always really excited to talk about. So residential side, I've been saying for a year now, we got to be careful is who thinks they're being too much of a genius right now. And that's not to, throw any shade. It's just when things get hot, people feel pressure. They feel this like, they have to do something. And often when all the sheep are going this way, guys, really, we should probably be going this way. And that's a really hard thing to predict sometimes, but that is kind of a general rule. So everything that we talked about tonight in the residential side, the Calgary has, at least as far as I've been doing this, always had two very different markets, the inner city market and the suburban market. And they're often not going in the same direction. And so, for the last really 5 years, we've been promoting the suburban market. We love secondary suites and long-term rentals, and that's all still very true. But what started when this market started really booming was it started in the suburbs. We started seeing this really huge demand on the rental market and the sales side for, you know, single family homes, suburban life. And, you know, we started talking about this, where we're going to see this appreciation become not tenable, right? It just doesn't work for people. And so that is already happening, where we've seen large growth in the suburbs. But the inner city and downtown core were the hardest hit, first of all, in the toughest years we've had. And I believe still have some decent runway ahead of them. And so if I was wanting to do a project or do some sort of, you know, get my hands dirty in some sort of way, that's where I would be focusing on right now. Because I do think the inner city, well, you know, they're not making more inner city land. We always say that, but it's actually true. And we're in that kind of point of the market where that would make sense. Now, that doesn't mean don't look at the suburbs. I just think you do need to have that long-term outlook to, you know, I've seen some cash flow sheets out there and people have a 10% appreciation on their sheet. Like that's not realistic. It's not going to do that for 10 years. And so we need to be conservative, think long-term. I still love the suburbs as long-term buy and hold assets, but we need to remind ourselves that that's why we are investing in real estate, is that long-term predictable pay down that you can achieve. So in the suburbs, those kind of suited type of properties will continue to do well. But as Una mentioned, we are seeing a lot of this construction now catching up. And so you need to be conservative always. So hopefully, you know, 12, 18 months ago, you were being conservative with the numbers that you were running then. Now, thankfully, hopefully interest rates will continue to go in the appropriate direction that we all want them to go in. And that will make things a little bit easier for us as well in the next couple of years. But managing your properties like a business, you need to be running them well, showcasing them well, managing them well. All of those things are really, really important right now, because there is a lot of people who are getting caught where they didn't realize that this would, you know, kind of be happening. So if you're doing a good job, I guarantee you will do fine. So inner city, I want to talk about condos, inner city and suburbs. Someone was asking about condos, I think, as well earlier. Two things in the condo market right now. If I was investing in a condo, I would not be going brand new. I think now is the time we are looking at resale condos. You know, this team has promoted different condo projects over the years, and there's been many that we haven't. And it's not that we don't have access to them or we cannot. It's that we have to feel we believe in these projects. And what we're seeing right now is kind of a lot of them. Andrea has a listing that's a really great example of this in a Skyview building in the Northeast, and there's 27 other listings in the same building for sale. So, you know, I could have predicted that. We did predict it. That we didn't promote that because I was worried about that, given the location and everything else going on around it. So we just need to be really strategic when it comes with condos, because they're the most volatile sector of any market, not just Calgary, just period. Condos are volatile because you have high volume in one area. And so they're always going to be more like the stock market, where it's like lots of fun when they're going great. And then it's really emotional almost, and everyone's selling and it becomes this thing. So be strategic with condos. Now, if I was buying for example, this building where Andrea has this listing, well, that is a great opportunity now, because I get to go in there, pick exactly the units I want, negotiate a good deal for myself, and get in there. So that is suburbs condos. Now, if I was going to be buying condos right now and just wanting to go buy one, I would be looking inner city and downtown. Whereas for years, we were saying the opposite. We were saying, do not look at inner city or downtown. There was too many condos. There was too much vacancy. And now that's kind of flipped on its head. And now is the time, if we are going to be buying it, one for our children, or looking for a more affordable entry into the market, that's where I would be looking now. I'd be looking more inner city, more established communities, downtown, because there's not a lot happening really in terms of new developments. There's a few, but if you look on the outskirts, there's tons of developments. There is lots coming and lots more coming. So that's how I would be strategic with that now. I think we are going to see still some good traction there in the condo market. And but on the suburbs, I think it's going to be a little bit more, it's going to be softer, because there's lots still coming when it comes to condos. residential kind of stepping up. If we can stay away from condos, that'll always be my preference. If we can go directly into a single family home, ideally something with a second unit, a secondary suite. We have been on the bandwagon of secondary suites since 2018, and I'm still on this wagon. I still love it. But we have to have that long-term view. And they work great in Calgary and the surrounding areas. We do a lot of them, and there's lots of opportunity to build your own, to pick up a project, or to buy turnkey and new and just, you know, hang on to it. But those are long-term opportunities. You could easily do a BRRRR on these as well. Going into the fall could be a great time to pick up a project if you want to add a secondary suite, especially to some of these listings maybe that are going to get caught a little bit this fall when they thought it was going to be the same conditions in, you know, October as it was in July or June. So it could be a great time to go project shopping this fall, I think. So that's what I would say there. We in the multifamily and commercial space, kind of even stepping up further from there, we are working with a lot of people trying to get over that hump, out of the kind of residential space into the commercial space. And there's just a few things really quick that I find myself repeating over and over and over again that is really important to understand. Danny talked a little bit about it, but the most important thing in multifamily in the commercial space is understanding that really the property's value, how you make money with these assets, is entirely determined on how well you operate it, on how much you maximize your income and keep your expenses in check. That's very different in the residential space where, you know, the listing I sold across the street from yours is going to impact your property's value. But that's also what I love about it, because I love that the better job I do, you know, the more this building is going to be worth. Now, there's influencers, of course, and all kinds of things. But at the end of the day, you know, with WealthShare, for example, that's what we did. We didn't renovate any units, just light things. We just managed these things well, and we built millions of dollars of equity doing that, just by doing a good job. And so when Danny mentioned these opportunities of underperforming and landlords that are exiting assets that they've had for, you know, potentially decades, almost always you're going to look at that rent roll and you're going to tell Danny, this sucks. You're going to go, look at this, but you have to have that vision of what you're doing with it. And there's no other way, that there's no other way around it. And so making sure that you're planning to carry it during that time. But we are so fortunate in Alberta that we can turn around an entire building in 12 months. Doesn't matter if there's, you know, month-to-month leases in there. There's ways to do that if you're doing renovations. There is, if it's fixed term leases, then you're just turning over tenants. So the opportunity to do that here is unique to Alberta because we have those options. And that's not the case for the rest of the country. Now, those are much bigger acquisitions when you have to renovate 6, 8, 12 units. But the opportunities are there if you're ready for that. I would not suggest this if you're new to real estate, you're just going to get into one of these. No, but I think for the more experienced residential investor who has a bit of a portfolio behind them and can see the kind of long-term plan here, there's lots of opportunity there. Now, MLI Select, CMHC, we get asked about this a lot. I talk about this a lot, almost every, like Danny's probably heard me say this over and over again. But there's a lot of retraining that sort of has to be done here because a few things need to be understood right off the bat. One is loan to value does not mean loan to purchase price. Big, bold letters. Loan to value does not mean loan to purchase price. The value of these multifamily assets, as I just said, is determined by how well it's being run, right? And so if you're buying an asset that's underperforming, that doesn't mean that the seller needs to let it go or can't sell it at a price that, you know, is determined by that. But you need to understand that that is what the plan is and what you're going to do with this thing. So loan to value, the value of the asset is essentially determined by the underwriting on the project. So they're going to look at the income, they're going to look at all the expenses, they're going to figure out what rate's going to be used and what kind of financing is going to be used, and that's going to determine your loan value. And then the other thing about the CMHC insured mortgages, which is a pro and a con, depending on your personality type, it's a pro right now in that your interest rate is determined by the bond market. It's not determined by what the Bank of Canada says it is. So the lender will go bond rate plus whatever. And that is a significantly lower rate than where interest rates have been sitting. And so that's been really attractive for a lot of investors who are struggling in the residential space and want to get up into the multifamily space because they're frustrated with the high rates. But the big asterisk here is the bond market, you know, is exactly that. It's a market. And so it is changing all the time. So when we're looking at an acquisition right now and we're going to close in 3-6 months, no one can promise you what the bond rate is going to be on closing day. And what that means is you don't know for sure what your mortgage payment's going to be. You don't know even for sure what the final loan value is going to be, because it could move a little bit as that number moves a little bit. And so those are big variables that us on the residential side like are used to seeing. We get our cash flow sheet, we're going to sign our mortgage, and that's our payment now, right? So until the deal is closed, there is still variables. Now you can lock in rates, and there's things you can do at a certain point, but it's expensive. And so you wouldn't be doing that like 3-6 months in advance, unless you really just don't care about money, I guess. But it's very pricey. So those are some massive differences from the residential side, and people are struggling with it. I don't know how many folks are interested in moving up from this residential to commercial space, but we're kind of repeating ourselves over and over again a lot with these few things, because it's very misleading, the information, especially around the MLI Select program, where it makes it seem like you can just go buy any building with 5% down. That is absolutely not the case. But there is big benefits to the MLI program. And those are longer amortization periods. You can go even up to 50 years. I actually prefer the MLI market, just the standard, which most people, it's not the trendy thing right now. I'm trying to make it trendy, so I'm going to keep talking about it. Because you still get a 40-year amortization, which is much better than the 25-30 years we get in the residential space. 40 years is still wonderful. We get to take advantage of the bond market. We get to a loan to value of 85-15 is kind of where you're looking at. So all of those things combined make it worthwhile to me, and then not have to be locked in with affordability, which is kind of what I wanted to point out next, where I think we're going to see some interesting kind of, I don't want to use the word fallout. We're going to see some interesting developments, because people getting these, and we have one as well, but we have a long-term hold approach. Getting into these MLI Selects mortgages, or insured mortgages, you have to use the point system. And if you've gone on there, you'll see that there's a point system of affordability, accessibility, and the energy efficiency. Lots of folks are using the affordability, which makes sense. Certain buildings make more sense than others, which is fine. But you're locking that in for 10 years. I mean, I don't know, if I look back 10 years, I could not predict a single thing about where the market is right now. And so even 5 years, like even what I, know now 5 years ago, like there's no way. And so what's going to happen is even probably even soon, even a couple of years, we're going to see these buildings that are locked in for a period of time, which might bring about some, opportunities as well, because us as the investors are making those decisions for someone in the future. You're making a decision to lock in these units for however, like 10 years at a certain rate. And then in 5 years, you're going to try to sell that building. And now you've made a decision for me that's going to like significantly impact me, or vice versa. So I think some creative opportunities might come out of this. So I'm kind of like keeping my eye on that, where there's going to be people who need to unload some of these multifamily assets for whatever reason comes in life, but they're locked in. And that might give an opportunity to get creative with these deals, because it's not going to look, awesome on paper when, in a year or two, rates are lower possibly than what they have. Plus they're locked in for affordability. Plus you're being babysat by CMHC all the time. So all those things are going to be interesting to see how that shakes out. Something I'm watching very closely, and we'll be, seeing, like anything, where's the opportunity in all of this. So that's kind of what I wanted to say about that program. I think honestly, like when I think about multifamily real estate and CMHC, it reminds me of how people say bring cash for BC. It feels like that. It's like all the problems that will arise, and you will have some, all of them are solved by money. And so if you don't have access to liquidity and capital, that's not going to cost you a massive fortune, then maybe we're not quite ready to jump into that kind of arena yet. So that's my kind of thing on multifamily. Oh, the only other thing I was going to mention, I don't know if I think Danny had to run, but is we're seeing a lot of these infill type of like 8-plexes, 6-plexes coming into Calgary. There's a lot in Edmonton already. That'll be something we'll have to watch closely too, to see about the inventory. I do like that a lot of it is inner city and downtown. I think we absolutely need it and can use it. And I don't think we're anywhere near like too much. But it will be something to watch. If I was doing a development to build something for myself right now, that's what I would do for sure. So in case I find a third me, that'll be my next project. Okay, I know we went over time by quite a bit, but hopefully that was helpful. But also want to be here for questions if there's specific questions that people have or things that we can help with. Certainly here to give you guys as much value as possible. Andrea is here.
Sorry, that's
Question.
oh, there I'm back.
Oh. You're back. Okay. Just well, if anyone is thinking of questions, please do. But we also wanted to talk about our next event, which I really hope to see in-person faces. This is the first time we're doing something like this. I'm trying it out, or we're trying it out. We have always had all our events free, and we're having a small $20 fee because the last 4 kind of in-person ones at Charlie 5, we had about a 30% show on who would register, which is hard for an in-person event. So we're charging a very tiny $20 fee, but we are giving you really good value for this. We have Patrick Francie coming to speak and Todd Hirsch coming. The very entertaining economist, Todd Hirsch, and this is something that we are very excited about. Can we put up the, did we put up a slide or something, Andrew? Oh, you're on your phone. And it's going to be at the Petroleum Club. I think I can find it here if you need. It's going to be at the Petroleum Club, and we would love to kind of do these types of events more. I've had a lot of people being like, can we do more in-person stuff? And we will, but it takes the support from you guys to do them. In this case, we even have paid speakers. So I think it'll be really valuable. I think right now more than ever, we do need to remember the economics. As I said, when we get very excited, things are hot. This is where kind of mistakes are made. So let's be strategic in thinking about the economics. And this will be a really great duo, I think, matchup between 2 very different speakers, 2 very different perspectives, but both lovers of this province. So I'm really, really excited for it. Andrea is going to speak about some like active opportunities in Calgary. I am going to speak about WealthShare and the passive opportunity there and kind of give an update. I'm going to kind of discuss how we can be remembering to, not give away our security when it comes to passive investments. So I'm going to focus a lot on suitability, security, and give a little update as to what's going on with WealthShare. So did we put a link in the chat? What date? This is October 10th. I'll put a link unless someone has it for this. So this is a mandatory sort of registration. I got the link here. October 10th. Oh, I'm only messaging one person. There we go. I'll put the link in there. We'll be sending out lots of emails and stuff for this as well, but we also do have sponsorship opportunities for this. If there's anyone who would like to look at the sponsorship opportunities, let us know. We'd love to have some great local kind of sponsors that are involved in the real estate space in some way. That would be wonderful. Shelley.
Thank you. Great presentation. So awesome. I actually have a question for Una, since she does the rental. A lot of the presentation was based on the vacancy in condos that are available. What are you seeing in desire from the immigration or net immigration, whatever it might be, in regards to outside of condos and apartments? Like, is there a bigger need for single family homes, suited homes, executive style homes? Are you seeing much that way besides just the peripheral apartments?
That's a really good question. We are not really seeing a bigger demand at this present time that's obvious compared to like a different, like the same time last year. I believe the demand could have been is probably the same. It's just the influx of the product is what's really changing things up.
What about inner
that
city
make
or
sense?
downtown versus suburbs?
Pardon me?
What about like inner city or downtown versus suburbs?
Inner city product, we're seeing a lot harder competition there. And you know what? That is we are seeing more people moving into the suburbs. There's a newer product. The downtown has a lot of older stuff. And so for the same price, they're getting brand new stuff. They're getting better parking options. And so we are seeing people moving out of downtown actually towards the suburbs. So that has been observed. That's been observed over the last, let's say, 2-3 months for sure.
Which is where those new kind of infill type 6 and 8 plexes will be really desired, I think, in the inner city. Like we don't have enough of that. It's a lot of older stuff. So I think those will stand out on to people who want to lead that inner city lifestyle. We kind of, for our WealthShare stuff, like our inner city townhouses have like, we have people emailing off the sign looking for them. They're 3-bedroom, you know, kind of really nice units. You know, the people in there will probably eventually become buyers in Calgary, but they want to lead a certain level of lifestyle up until then. So we have a 19-unit townhouse block in Windsor Park, and we get an email like a couple times a week just from the sign saying who owns the project, of people interested in those. But that's a very like specific type of location and buyer. So interesting. But yeah, I think the older stuff, like it is, if you can get more to go out. Good question.
Yeah, and it's also for, I don't know if I how I worded it, but you're getting a newer stuff for less money actually. So
well, that makes sense. I mean, it's going to
you're
cost you more
looking
to
at, yeah, like those, that's it's obvious, right? So
well, and a lot of people new to Calgary or to Canada, or it isn't like it's far to live in the outskirts, right? But, and that's kind of been what we've been talking about for years here. But now there's just a lot of new construction. Speaking of the new construction, when I was talking about the multifamily, we got this lesson learned on the Bergen on the first acquisition we did. CMHC right now, I think by the end of September, we'll have gathered all of their data for what they're going to use for vacancy rates for next year. And all of us as multifamily commercial investors have to just like live by whatever basically they come out with. And they consider under construction to be vacant. So I would be nervous in certain areas right now when you're driving around, you see lots under construction, that CMHC is going to go, well, this is concerning. Even though they might be condo, they might be intended for end users, they consider that vacant building. So just to kind of share the example, was on the Bergen, on the first acquisition, that we had passed this kind of September to January, and the next year had came. The previous year, the vacancy rate that they had used was like less than 2%. On the when we went to refinance, plenty of projects were underway, and they wanted to use 6%. That jump up in vacancy affected our potential loan value by almost $1 million. So that's why these numbers are so impactful. Now, guess what? If that building would have been literally 2 lots over, we would have been able to access an additional $1 million. It was like $1 million swing in either direction. It's insanity. And so these types of variables in the commercial space and the multifamily space, you're not really thinking about, and you look, well, the data says this today, but these deals take so long to put together, the data is going to change. So I'm very curious when the CMHC report comes out in January, what they're going to have to say. You can try to argue these things and appeal them, but at the end of the day, it is your underwriter's decision that is assigned to you, and that's the underwriter. If you want to get a new underwriter, you're going to start all over again at the back of the line and wait 3 months to get there. So you're likely you're going to probably take what you can get a little bit. So that was, a big one in terms of timing. If you are if you're trying to refinance a property right now in an area that has a lot of things under construction, I would hurry up and get it done the best you can, because we do not know what that number is going to be next year. So that was a big one that I will never forget, but didn't really look at it that way because they weren't complete. There was no completion done. So really interesting. Yeah. Ouch. Yeah, exactly. It was, and it's like, you didn't lose the money, but we also couldn't get it out. So now we have a lot more equity sitting in the deal, but you expected to take it out. So yeah, that vacancy one is a tough one because it's not necessarily logical. So that's my story time around that. Anyone else with any questions? Is everyone excited about the mastermind? I hope so. I can't be the only one. Thanks, Darren. Good to see you. As always, guys, reach out with anything you need. We're here to help you with anything. If you're struggling with anything, let us know. Awesome, Alma. Hope to see you there. And yeah, if you're struggling, you need advice, you need perspective, please let us know. I know it's been a difficult year in a lot of ways for a lot of people. We want to be here to support you, and sometimes having a different perspective can sometimes help. But also, if you have any things that you're wondering what to do with, like, should I sell this? What should I do with it? Should I be refinancing it? Those are the types of things we can help with as well. Can help make the decision more clear. Like, let's run the different scenarios. What does it look like? And really, that's how we should be making our decisions, not, just with one factor. So we can help run those for you to get the answers you need as well, if you're deciding what to do with an asset that you might have, but it's changing very rapidly, it feels like right now. So yeah.
Chad, I saw your question in there for sure. I know with you being out of province, we definitely have contractors we can recommend if you're looking for doing any type of renovation or suite conversion or any kind of project, for sure.
Yeah. Good question. We didn't even talk about the secondary suite and grant program. Has anyone gone down this path? Shelley, have you?
No, I haven't done any suited projects for about 2 or 3 years. I've done more advising, but no, I haven't done a lot on that aspect right now.
Yeah, if anyone has gone down that path and would love to share it with the group, would be great if we could do a little Q&A with you. Maybe I'll post that in our group as well, because I'm curious how that's going. Also, don't forget, we have our Calgary Real Estate Investing Facebook group, which I don't have up here, but you can always ask questions in there. And as always, we're here to help.